Hello guys, welcome to my next video. In this video we are going to discuss about what is my strategy for day trading. One of the strategy which I use for day trading is pivot points and price action. So why pivot points, or what is pivot points? A pivot point is a technical analysis indicator, or calculations, used to determine the overall trend of the market over different time frames. The pivot point itself is simply the average of the intraday high and low and the closing price from the previous trading day. On the subsequent day, trading above the pivot point is thought to indicate ongoing bullish sentiment, while trading below the pivot point indicates bearish sentiment. The pivot point is the basis for the indicator, but it also includes other support and resistance levels that are projected based on the pivot point calculation. All these levels help traders see where the price could experience support or resistance. Similarly, if the price moves through these levels, it lets the trader know the price is trending in that direction. In simple, pivots are extremely powerful price based with support and resistance levels that are calculated using a prior period's high, low, and close. Why not other strategy instead of pivot? Pivot are purely calculated on previous day price of high, low, and close. So depending on previous day only, pivots are placed for current day trade, so it is one of the leading and powerful tool unlike other indicators like RSI, MACD, stochastic, etc. Those indicators change according to time frame changes, like when it is in 5 mins chart it different from 10 to 15 mins chart time frame. But pivot points does not change according to time frame, so it will be the best tool for day trading, and they could make out which direction it flows. Who and all use pivot? Pivots are used by big players in market and institutes, professionals, etc. So what about price action? Price action is one of the technical analysis absorbing the price movement of stock with high, low, and close of each candlestick so that it will able to know at which direction does the price of stock moves. So combining with both price action and pivot points, I use this strategy for day trading. Now let us see one of the type of pivot point is CPR, which means central pivot range. It will be the most important pivot which helps to analyze the trend and direction of the stock price. Without CPR in chart we can't analyze the direction of the stock. CPR looks like this, which is shown in this chart. In central pivot range, the center line is called pivot line and top line is known as TC, which means top central pivot, and bottom line is known as BC line, which means bottom central pivot. So these three lines combined together will be known as CPR. With the help of CPR can forecast trending or sideways price behavior, dictate the day's direction, or serve as an integral part of a trend. This CPR range can tell you so much about the potential movement of the upcoming day and even how the prior day transpired. Moreover, the placement of the CPR can give you a certain bias about the upcoming day. Knowing the location of the CPR at all times allows you to keep your finger on the pulse of the market and provides you with a significant trading edge. In trading, an edge is all you need to make money. The central pivot range controls the tides of the market. In this chart we are able to see R1, R2, R3, R4 lines. Those are known as resistant line, and S1, S2, S3, S4 are known as support lines. These resistant and support lines are calculated with the help of previous day high, low, close. With the help of these lines we can able to figure out where does the price take support and move up, and will the price hit the target. And where does price take resistance and fall down, and will the price hit the target when we are on sell side. So these are the pivot points. Now let us see the formula for calculating the pivot points are. The formula is calculated with the help of previous day high, low and close. Pivot line is calculated with high plus low plus and close divided by 3. Bottom central pivot is calculated with high plus low divided by 2. Top central pivot is calculated with pivot minus BC plus pivot. So in a same way for resistant lines and support lines like R1, R2, R3 and S1, S2, S3, these formulas are used as I mention in this video. With the help of this formula we can able to calculate even the weekly pivot and monthly pivot too. Nothing much change in formula, only change will be instead of taking day high, low and close. For weekly we need to take week's high, low and close price. And for monthly pivot, we need to take month's high, low and close price. Compared to monthly and weekly pivot lines, I would suggest daily pivot lines for day trading. It is the most important and powerful for day traders. Now let me show you how I use this strategy in my trades. This is a Nifty 50 chart which is on 7th April 2021. In this chart the first candle itself it took strong support on CPR line and crossed the CPR. So that it went till R1 and hit the target, and again it struggled for a while near R1 line and crossed the R1 line and went till R2 line around 1 o'clock. Again from R2 it took resistance, fell down till R1 line. So this is how my strategy is applied in this trade. So I had 3 opportunities for a good trade. Let's see one more chart, and this is Bank Nifty chart which is on 9th April 2021. In this chart on the first candle fell to S2 line, and in the second candle it took support and went to S1 line, and after a while again it took support from S1 line and went till CPR line, which is most important line of the trades. Over there it took resistance around 11 o'clock of the chart and fell to S1 line. So this is how I had a good trade for the day. So I use 5 minutes chart of candlestick pattern and use this pivot lines for my entry and exit of trades, which is more useful for my trades. So it entirely gives me the exact picture of the trade with the help of pivot lines. And I will able to analyze where does it take support and resistance and move on so that it hits the target as I had expected. I used to follow 1:2 ratio, which means 1% of loss and 2% of profits for my entire capital of investment for that trade. So always follow 1:2 ratio. So when you are not able to be succeeded in your trade, then there will be only 1% of loss instead of huge loss. So these things we will discuss on my upcoming videos. Thank you for watching this video. Make sure subscribe and press bell icon for more of my upcoming videos and trade related information. You can also join my Telegram channel, the link will be given in the description.